We should just touch on a little bit of the stats here, though. 41% of apparel products sold around the world are produced in China, according to the American Apparel and Footwear Association. So joining us now for more on this is American Apparel and Footwear Association CEO and President Rick Helfenbein. Rick, thank you so much for being here.
Thank you. This is great.
Yeah, no, it's great to have you on set. Happy Friday. I want to dig into this a little bit more, though, because when people do think about goods from China, it does happen to be in the area that you specialize in. So what kind of impact is this going to have both for producers and then also for the end consumer?
Well, our industry is particularly exposed for a whole host of reasons. As you mentioned, 41% of all apparel coming to the United States comes from China. 72% of footwear, 84% of accessories. We cover all three.
Jeez.
So we are highly exposed to China. And you could say, okay, why don't you go somewhere else? It's not so easy. The next highest is 14%, Vietnam. Mm-hmm. So between China and Vietnam, that's 55% of the market. Add in Indonesia, India, Bangladesh, that's 75% of the U.S. market. We don't exactly have a place to go with all these goods, so we're kind of trapped. And these tariffs will hurt us. They will hurt retail particularly badly. And what a lot of people leave out in this equation is they don't understand the retail dynamics. And I'll backtrack a bit. 2017, we had more bankruptcies than we did in 2008. 2018, we lost over 100 million square foot of retail. Mm-hmm. 2019, the first 4 months of this year, we saw more announced store closings than all of last year.
Yeah.
So retail's kind of sitting on the edge.
And this certainly won't help.
You raise the prices to 25%, and holy cow.
How quick would this actually impact prices here? Because is there a lag time between produced goods that are already there, or is it immediate, you think, when we see these kick in?
Some of it's immediate because retailers are going to think, oh my God, I have to cost average. Mm-hmm. You have to think like a manufacturer to the extent, what's being made in the factories right now, and we're making back to school right now. So maybe I better cost average because I know I'm going to have to raise my prices in the fall. And right now, these tariffs are only nibbling at our edges. They got us in our hats, they got us in our handbags, they got us in our wallets, they got us in baseball gloves, middle of baseball season. It's painful. But 10%, like you said, maybe this will go away. For us, it was like Bob Marley land. Don't worry, be happy. Things are going to be all right.
Yeah.
And then all of a sudden, Sunday at noon, the president tweets, we're going to 25%. That bothered us. But what bothered us more was when he said, I'm going after the last $325 billion, which includes all apparel, all footwear. And we weren't able to grieve on the last $200 billion, and we don't know if we'll be able to grieve on the next $325. This is a problem. You will be baking inflation into our system, and pretty simple. Prices go up, sales go down, jobs get lost.
Which is partially probably why we're seeing some of the market reaction to this right now, because it's not just apparel that's impacted by it. I mean, it's even broader than that when we look at kind of the companies that are worried about what this could mean for them.
But don't you think that it has a lot to do with earnings? I mean, right now we have great earnings across the board in our country. I don't know that the president would have came out with a stance this hard if we didn't have a 3.2 GDP number on the last report. I think, he knows the wind's behind his back. And I think when you're in the middle of a negotiation that this big, you have to use all your guns. And he knows he needs to strike while the iron's hot. I don't believe that even on the China side, their economy is going to take a major hit if we push through on this thing.
We've heard that argument.
I just can't see it. I mean, I was speaking with someone earlier today, and they said something. In a negotiation, you got to make sure that both sides win.
Sure.
And right now, China just completely pulled off of the table, and they haven't even been willing to negotiate at all in regards to our intellectual property. So at some point, we got to do something.
I want to ask you about that, Rick, real quick, just to wrap up here. I mean, it is true that there is going to be some concessions here, and there's going to be temporary short-term pain. The problem would be, if what you're saying is true, is that these retailers who are already on the brink can't sustain that short-term pain, then it won't matter much if there's some long-term benefits down the road.
Well, in answer to your question, if you're going to do it now while the economy is good and hope for a quick deal. Our problem is if this lingers. If this lingers, this is highly problematic.
Yeah, for retailers and customers as well. All right, Rick Helfenbein, thank you so much for being here. Really appreciate it.